Hi guys, we are the marvelous FCPAs, and today we're gonna discuss the Chapter 9 income taxes. So let's start. We use past 12 to properly present income tax information in the financial statement. We have two kinds of profit, the accounting profit and taxable profit. Let's differentiate the two. Accounting profit computed using PFRS by total income less total expenses, excluding tax expenses, while the taxable profit computed using tax loss by taxable income less tax deductible expenses. They are not so equal, so meron tayong differences, which is the permanent differences and the temporary differences. The permanent differences, these are non-taxable and non-deductible expenses o yung expenses na hindi mo talaga tataksan ay deduct kung tax ang pag-uusapan. So basically, what happened is they have no future tax consequences. Temporary differences are differences between the carrying amount of an asset or liability in the statement of financial position and its tax base. Temporary differences include timing differences. Temporary differences ay pwedeng taxable temporary differences o deductible temporary differences. Pag sinabing taxable temporary differences, ibig sabihin there is an amount na taxable in the future na magra-rise sa deferred tax liabilities. At pag deductible temporary differences naman, ay there is an amount deductible in the future na magra-rise naman sa deferred tax asset. Some examples of circumstances that result to a deductible temporary differences. First, rent received in advance, tinitreat siya as an earned income sa financial reporting pero sa taxable income nire-recognize agad ito upon receipt of cash. Warranty obligation nire-recognize siya as expense kapag nabenta na yung product sa financial reporting pero sa taxation nire-recognize lang kapag nabayaran na. Advances received from customer, tinitreat as liability sa financial reporting pero sa taxable income nire-recognize siya agad upon receipt of cash. Ang depreciation period na ginagamit sa financial reporting ay mas maikli kaysa sa taxation. Asset liability method, isa sa mga most consistent na ginagamit for deferred taxes at nire-record din siya ng past 12. Yung asset liability method ina-accounts both timing differences and temporary differences. Timing differences, it is a term designed para ma-point out yung difference in time kung ano yung mga transaction na nakaka-apekto sa financial statement and para ma-point out din kung anong mga items yung nakaka-apekto sa taxation. Sa temporary differences, pwede maging deductible or taxable. Tax base, total amount ng asset or income na tinatax ng taxing authority, usually the government. Ginagamit ito sa pag-calculate ng tax liabilities. This can be in form of income or property. Tax base of an asset, kinakapitalize as asset, tas dinededuct one time in the tax return. For example, may mga software development costs. So, kinakapitalize siya as intangible assets sa tax yung ginastos sa software development at dinededuct one time in tax return. Kapag naman yung income is not taxable, yung carrying amount ay equal sa tax base. Tax base of a liability. Its carrying amount less any amount that will be deductible for tax purposes in respect of that liability in future periods. For example, current liabilities include accrued expense na may carrying amount na 100. I-record natin ito ng debit expense at credit accruals. If the carrying amount represent a liability that will only be recognized in future period but was already in taxable income, magre-result ng temporary difference of 100. So kapag 100 yung temporary difference, yung tax base must be nil or zero. Kung naman dineduct na agad for tax purposes, the tax base of accrued expense is 100. Income tax expense and current tax expense. Tax expense or income tax expense. Ito yung accounting para dun sa tax na binabayaran natin. Nakatala dito kung magkano yung total amount na bayarin ng isang individual o isang company man. Kasama siya sa income statement. Current tax or current tax expense, accounting for income taxes payable or receivable for the current year. Current tax siya kapag babayaran mo siya within a year or yung paunang bayad mo. Deferred tax expense, the sum of the net changes in deferred tax assets and deferred tax liabilities during the period. Current tax liability, amount of money you owe to tax authorities, yung utang na dapat mong bayaran within a year kasi nga current siya. Current tax asset, kunwari yung tax na alam mong babayaran mo sa BIR ay 300k pero yung siningil lang nila sa'yo is 150k, bale meron kang advance payment sa kanila na 150k, excess yun, pwede nila yun i-deduct next period. Kaya current tax asset siya kasi excess tax payment. Opposite siya ng tax liability. Tax liability, 150k lang yung binayad mo pero dapat 300k sa part ni tax or ng BIR. Formulas, ginagamit dito yung income statement approach. Gagamitin natin tong table na to para makompute natin yung income tax expense and current tax expense. Una, identify muna natin ano yung accounting profit nila or yung tinatawag na pre-tax income. Madalas naman given siya, pero kung hindi siya given, ituturo din namin kung paano siya i-compute. Next is yung mga permanent differences. Pag sinabi natin permanent differences sa pagre-record ng income and expense, hindi pwedeng parehas meron si tax and accounting. Dapat isa lang sa buong usapan nila. Napaliwanag naman yun sa mga example kanina. So kasama dito yung mga non-deductible and non-taxable income na subjected na sa final tax. Add natin yung non-deductible expense kasi ang sabi diba magkaiba yung point of view in accounting sa ni taxation. Kung kay accounting, mina-minus siya sa cash, kay taxation naman ina-add siya. Next is yung non-taxable income, less siya kasi sabi daw kay taxation, hindi siya nako-consider na income. After nyan, equal na siya sa accounting profit subject to tax. Dito pa lang mag-uumpisa yung isa-subject na para sa tax. I-multiply natin siya sa tax rate na given, then equal siya sa income tax expense. Then, pagpapatuloy lang natin yung computation. Doon naman sa temporary differences, ang sabi dito, temporary lang yung pagkakaiba nila. Na ang ibig sabihin, halimbawa nagbayad ka ng tax ngayong period, hindi na siya isasama ni taxation sa pagre-record na yon. Period, next accounting period na. Pero dapat at the end of the contract balance pa rin silang dalawa. Dito na din pumapasok yung deferred tax liability and deferred tax asset. Yung temporary difference, ileless lahat ng makakasali sa taxable temporary differences at add naman sa deductible temporary differences equal to taxable profit then times again sa tax rate na equal sa current tax expense. Para naman to sa deferred tax liability and asset, kaya siya kasali is madalas din siyang hinahanap sa computation or requirement din siya para naman makuha to. Sa deferred tax liability, add lang lahat ng nasa table, taxable temporary difference, then times sa tax rate para lumabas yung deferred tax liability. Ganon din sa deductible, nasa illustration kung para saan siya ginagamit. Kapag yung item mas mataas yung financial income, the difference is taxable temporary na nagra-rise sa deferred tax liability. An increase in taxable temporary difference or deferred tax liability is deducted in the formula. If the financial income less than taxable income, the difference is a deductible temporary difference which give rise to deferred tax assets. An increase in deductible temporary difference or deferred tax asset is added in the formula. Solution. Pre-tax income is given na 100,000, permanent difference o non-deductible yung loss on expropriation, and premium on life insurance. Ang sabi kasi ni BIR, dahil nga daw insurance siya, dahil sa pagkamatay ng isang tao, hindi na madededuct kaya nasa permanent differences siya kasama. Next naman yung non-taxable income. Yung interest income na subject na sa final tax, considered as permanent differences, equals to accounting profit subject to tax then times sa 30% na tax rate, madalas naman siyang 30% talaga. Makukuha natin yung income tax expense. Excess depreciation, kapag sinabing excess, nasobrahan yung bayad mo kaya considered siya as taxable temporary difference. Warranty expense, higher than expense recognized in financial reporting compared to taxation. This makes financial income less than taxable income, kaya siya deductible temporary difference. Rent received in advance. Nire-recognize siya as liability kay accounting
but taxable income kay taxation. This makes financial income less than taxable income, kaya siya deductible temporary difference. Add naman siya sa formula. Compute lang siya para makuha yung taxable profit na 149,000, then times natin sa tax rate na 30%, makuha na yung current tax expense na 44,700. Para naman makuha natin yung deferred tax and liability kay temporary difference, meron tayong depreciation na 10K times 30% equals to 3,000 less siya kasi ayun yung nasa rule. Sa deductible naman, warranty na 15K times 30% equals to 4,500. Ganun din kay rent in advance. Kung para saan sila makikita natin next slide. So, ang income tax natin ay 40,800 at ang current tax expense ay 44,700. Requirement C. Find the deferred tax expense or benefit. Ito na siya para dito yung last na na-compute natin kanina. Deferred tax na 6,900 less deferred tax liability equals to deferred tax benefit. Next, yung requirement D, current tax payable. Current tax expense kanina na 44,700 less yung quarterly income taxes paid na nasa illustration is equal to income tax payable. Letter E, ending balance of deferred tax liability. Gagamitin natin siya ng T account. Deferred tax liability beginning na nasa illustration, 12,000 times 30% tax rate equals to 3,600, then yung 3K na nasa table kanina equals to 66 na ending balance. Ganon din sa letter F. Nasa debit naman siya kasi doon siya nag-i-increase sa debit. Dito naman sa illustration na ito, kailangan natin i-determine yung pre-tax income. Pero given na yung taxable income profit na 100,000. Sundin lang din natin yung table kanina. Missing yung pre-tax income, so paano nga ba natin siya makukuha? Squeeze lang natin, which is mag-umpisa tayo mag-compute sa baba hanggang pataas. Una, yung taxable income or profit na 100,000, and then yung bad debts na ililes natin kasi pabaliktad na tayo, less din yung depreciation, then add 40,000 equals to 115,000 na subject for tax. And then continue lang, add 6,000 less 35,000 is equal to 86,000 na pre-tax income. So, ang pre-tax income natin ay 86,000. Recognition of deferred tax is the estimated future tax as a result of current and past period transactions in the financial statements. It is an accounting entry and not the actual tax payable or refundable from the revenue authority. Ito yung pagkilala sa ipinagliban na buwi. Deferred tax liability ay ang halaga ng mga buwi sa kita na babayaran sa mga darating na panahon bilang resulta ng mga pagkakaiba-iba na nabuwisan. Deferred tax liability is a non-current liability. It's not a current liability, so you must be able to distinguish between tax payable and deferred tax liability. Tax payable or income tax payable. Deferred tax assets is the amount of income taxes recoverable in future periods as a result of deductible temporary differences, unused tax losses carried forward, and unused tax credits carried forward. Ito yung mga halaga ng mga buwis na kita na mababawi sa mga darating na panahon. Here are the formulas for calculation of deferred taxes. Ito yung mga halimbawa kung paano makuha yung nasa formula. The foregoing illustration attempt only to illustrate the provision of this standard, but it should be noted that under the NIRC of the Philippines, dividends received by corporation are not taxable. Ibig sabihin, ang kinita ng investment ng korporasyon sa ibang korporasyon ay walang kaltas na buwis ayon sa NIRC of the Philippines. This illustration is an example of investment in associate income tax payable. Requirement: how much is the current tax expense for the year? First, kailangan alamin natin yung amount ng income or shares mula sa investment ng ABC Corporation, which is 250,000. Alamin din ang share sa dividends na dineclare ng XYZ Corporation. Dividend subject to taxation is equal to 10,000. Third, i-compute ang deferred tax liability. Share in profit equal to 250,000 minus taxable income 10,000 equals to 240,000 taxable temporary differences. Times natin sa 30% tax rate equal to 72,000 deferred tax liability. ABC current tax expense is computed as follows.
Limitation on the recognition of deferred tax asset. Deferred tax asset reduces the tax payment when it reverses in a future period. Ang deferred tax asset ay asset na galing sa mga overpayment ng tax o advance na pagbayad sa tax. Ito ay sinasauli sa business entity o ginagamit na kabawasan sa tax sa susunod na reporting period. Pag nagkaroon ka ng recognized overpayment, ibig sabihin may asset ka. Under PAS 12, an entity is permitted to recognize deferred tax assets only when it's probable that taxable profits will be available against which the deductible temporary differences can be utilized. When it is not probable that a deferred tax asset will be realized, it's either not recognized or reduced to its realizable value, which is ever is appropriate. Current tax assets and current tax liabilities are measured at tax rate that is applicable to the period which the taxable profit has been earned. Deferred tax assets and deferred tax liabilities are measured at tax rates that are expected to apply to the period of their reversal based on tax rates substantially enacted by the end of the reporting period.
This illustration showed deferred tax asset measurement. Requirement compute for deferred tax asset on December 31, 20x1. Solution: the deferred tax asset on December 31, 20x1 is computed as follows. In year 20x2, warranty cost amounting to 40,000 times natin sa tax rate na 32% equals 12,800. In year 20x3, warranty cost amounting 30,000 times natin sa tax rate na 35% equals 10,500. So, ipag-a-add lang natin. So, ang warranty cost natin is equal to 70,000. Deferred tax asset is 23,300.
In this case, makikita natin yung information pertaining to the income tax of the ABC Corporation, wherein provisions for probable loss and litigation amounting to 300,000. Etong provision is subject for deduction kapag nabayaran na. Ito yung parang ina-expect ng company na mawawala sa kanila due to litigation. It's either meron silang pangkaso laban sa company which they will expect na mababaw sa kanila, which is through payment. Sa financial reporting, ang revenues nakabase sa percentage kung ilan na ang completed bill, which an example of this is the unearned revenue, which will become a revenue once it is rendered or na-complete na. On the other hand, ang revenue naman for taxation purposes ay nakabase sa nakolektang billings or receivable that arise from the company's business transaction. 1 million is the total revenue recognized for financial reporting, while 800,000 is the total recognized revenue for taxation purposes. The 200,000 difference is what we call a revenue that is subject for taxation. The company's pre-taxable income for the years amount to 1 million. Income tax rate is 30%, but it is enacted by law which increases to 32%. To compute for the company's current tax expense, the company year income tax expense less deferred liabilities tax expense, then add by deferred tax asset. Supposedly 1 million is subject for the 30% basic tax will be the only tax to be paid by the company. Pero the above scenario is also part of the current tax expense of the company. Instead of 1 million times 30% equals 300,000, the basis of the company's current tax expense would be the total tax computed for the above transaction, wherein 1 million has a constant income tax expense of 298,000, which would be lessened by 64,000 deferred tax liability arising from 200,000 revenue multiplied by the effective tax rate of 32%, then add by 96,000 deferred tax asset that arises from the provision of the company against probable loss and litigation. 300,000 multiplied by effective tax rate of 32%, 298,000 less 64, then add natin 96,000, give us the total of 330,000, which is the company's current tax expense for the year. current tax assets and current tax liabilities, dapat ang entity ay legally enforceable right to offset at ito ay intention to settle. While in deferred tax assets and deferred tax liabilities ay dapat ding legally enforceable right to offset and nakarelate siya sa income tax na ipinataw ng same authority. Presentation in Statement of Comprehensive Income Tax Consequences are accounted in the same way as the related transactions or events, kaya't kung ang transaction ay na-recognize in profit or loss, the tax is also recognized in profit or loss. And last, the interperiod and intraperiod tax allocation. Interperiod tax allocation, ito ay concern sa temporary differences habang ang intraperiod tax allocation ay nakasunod lang lagi kung nasaan si income. That's all. Thank you so much.